Hey everybody, how is it going? Welcome back to my channel. Well, another day in the market, another bloodbath. So in this video, I'm going to be talking about pretty much just the overall market, what I am seeing, and what I plan on doing from here. But I'm going to start off with the NASDAQ. So I got the QQQs up right now. And I think the trading day is pretty much just about over, so it's safe to say there's no way the NASDAQ is going to be turning up and ending the day positive. We can see it's crashing through that support area on higher than average volume, so that is not a good sign. Now, yesterday in my Patreon group, I was talking about how this little reversal day yesterday was one that I would normally like to buy. Let me get this little box out of here real quick if I can click on it. Normally after like 3 big down days and we get a gap down in the market and then it gets bought up the rest of that day, I usually like to go long on a day like this. I go long on days like that almost every single time, but yesterday just did not feel like a bottom at all. So I kind of held off on that trade, and it's probably a good thing that I did because there was absolutely no buying going on today. Gap down just a tiny bit and it just sold off all the way into the close as it's looking right now. So man, just a nasty day, but I would expect some more follow through to the downside tomorrow. We got big earnings coming out after the close. I think Google's coming out after the close, and can't remember who else, but I think this is the point of the sell-off where they come after the big boys. Some of the stuff that has held up a little bit better than normal, or some of the stuff that has been some of the big winners over the rally. And I wouldn't be a bit surprised, if they really come after Google and some of the other big names in the market like Tesla and Apple and some of those other names that are, some of the names that have been leaders over the last several years. But what we got going on right here in the NASDAQ is why I had that little square up. I think we got a little bit of a measured move going on here. So a measured move is just when a market comes down, then has a consolidation, and then breaks down below that consolidation. A lot of times you can measure that move out. So what I like to do is take this little trend line tool. I don't have an actual measurement tool on my TC2000, so I take that little trend line tool, put it at the bottom of the consolidation to try to figure out a little bit of a target. And the target that I'm seeing right now on the QQQ is right around the 311.5 to 312. This is not an exact science, so I wouldn't be a bit surprised if it broke a little bit below that target before we got a snap up, but I also wouldn't be a bit surprised if it just screamed to the downside, because it looks like the acceleration is really starting to the downside, is really starting to kick in to the market. So that is not a good sign. But there was a big spike up in the VIX today, so I think if we do get below that target right around 311.50, I'm probably going to dip my toe in the water and start buying some stocks. But let's jump over to the SPY, or the S&P 500. You can see the same exact thing. A nice reversal day yesterday, but just sold off today, landed right at support. So it's going to be interesting to see where the market opens tomorrow. I'm guessing it's probably going to open down, but we'll see. Take a look at the diamonds, or the Dow, and the Dow has been the strongest of the indices, and this thing's just has been taken out back and shot in the face over the last 5 days. All of the progress that the Dow made over this little consolidation J-hook type move was wiped out in 4 trading days. You know that the strength of the trend is where it moves as far as it did the other way, but in much less days. If it's doing that to the downside, then all the strength is to the downside. If a stock has a pullback and then it goes, it closes that pullback in only 2 days or so, then you can tell that the strength is with the buyers. But right now, the strength is definitely with the sellers. Let's take a look with the IWM. IWM, same thing, just testing that support right around 187.75, and it looks like it's going to be breaking through it at the close. So the market is not looking good at all. Let's take a look at some of the ETFs just to see how some of the different sectors are doing. Let's start with the strongest one, with XLP. This is the consumer staples. You can see the consumer staples, even though they have been strong, they have come after the consumer staples as well. They are coming after everything right now, but certainly the XLP, the consumer staples, are the strongest ones. And the next one, of course, is energy. You can see energy had that breakout, and then they came after the energy stocks very hard as well. So XLE was no different. They came after that one, and if you're looking to get into energy, you might get some great opportunities over the next few days. Next one was the XLB, and this one is the materials. You can see the materials have been in a nice consolidation, looking like they were going to break out a few days ago, but then once this market rolled over, they came after the materials as well. I'll take a look at the XLI. Let's take a look at the industrial. You can see the industrials are really starting to round into a rounding top. That is not a good sign. I kind of expected this sector to be a little bit stronger than they are, but they are rolling over hard. Next one is XLF. The financials have broken support, and they are looking a lot like the XLI, only just a little bit worse. So the XLF, even though interest rates are going up, which is usually good for financials, it is not looking like it's good for them right now at all. Next one is the XLK, and these are when they start getting nasty. You can see the technology ETF is really starting to roll over, looking basically just like the NASDAQ. So nasty looking chart right there. And then of course we got the XLC, which is the communication sector. This is definitely where you don't want to be at the moment. These guys have been rolling over hard. They got stocks like Netflix, AT&T, a lot of stocks that have been getting hit pretty hard are stuck in this one right here. So even though AT&T has actually done a little bit better lately, but a lot of these sectors are not looking good. The consumer staples and energy are looking like they are the ones you probably want to be in if we do find a market, and those are definitely the two that I'm going to be looking at myself. All right, so the most significant thing that I saw in the market today was the spike in the VIX. This is the CBOE Market Volatility Index, or otherwise known as the VIX. And I was talking in the Patreon group that when it was right around 28 today, that if it got into the low 30s, especially the mid 30s, I wanted to be a buyer of stocks, but I didn't think it was going to get there today. I thought maybe it might be there, in a couple of days, maybe the end of the week. But it got there today. That just shows you the extreme fear in the market right now. And if we get a move up into around 36, 37 tomorrow, I'm definitely going to be a buyer of stocks, because as you can see right now, we're in a nice little channel with the VIX. So if you bought when the VIX was at an extreme high point up here in the mid 30s, you usually caught that next swing. And if you bought when the VIX was down around 19, 18 or so, that was usually a pretty good time to actually be selling a little bit of stock. And I actually sold a little bit of stock when the VIX was under 20. If I known it was going to crash the way it's crashing right now, I would have sold everything. But I usually don't ever sell everything. But when the market gets too extreme, especially when it's in a little bit of a channel like this, I like to either lighten up when it gets into these extreme levels to the upside, and then trim a little bit once it gets to these extreme levels on the downside. But I'm thinking that we're probably going to be hitting the upper 30s this week, and if we do, I am definitely going to be a buyer of stock. This doesn't happen very often. Now, there is of course, a possibility that the VIX could blast through this channel, and in fact, if we go back in time, we can see that it has had massive spikes in the past. Obviously, this little regime that it was in during or right before COVID, let me go back here. Obviously, these were the highs that you wanted to be taking a shot in. Now, we can argue that the COVID collapse was a once in a lifetime type of thing, but obviously that didn't work in that trade. But if we go back or if we go forward to where we are right now, we can definitely see that when it gets in these little channels, it never hurts to be buying those extremes, because usually you end up getting a snapback in the market when that does happen. All right, well, I didn't have any trades today. I just kind of was in a little bit of wait and see mode. So I'm going to just end the video right here. But before I do, I just want to show you those extreme levels on the VIX. That big spike that they had in December happened on December 3rd, so that happened right there. That proved to be a pretty good buying opportunity. The next one they had was on January 24th. That happened on this day right here, so that was a good buying opportunity as well. And then that last spike happened on the 8th of March, so that was right here. That was a pretty decent buying opportunity as well. You can see had a bounce up into the 8-period exponential moving average, a little bit of a pullback again right before we had that explosion. So I just wanted to reiterate how decent of a buying opportunity those big spikes can be. Now, of course, nothing is guaranteed in the market. This could be the point in the market where the bottom really drops out, and I wouldn't be a bit surprised if that does happen. So if the VIX does spike to around 37, 38, 39, I'm probably going to buy, but I'm going to buy cautiously. I was buying a little bit heavier on these spikes the last time, and I wasn't selling a ton of stock when we had that spike to the downside when the QQQ was up here, but I did end up raising some cash, so I feel lucky that I did raise some cash that I could be taking advantage of these cheaper stock prices. Haven't really bought anything yet, but hopefully we can get some more downside in the market, and I can take advantage of it. But like I said, I'm going to end the video right there. If any of you guys have seen anything significant in the market, make sure you leave it for me down there in the comment section, especially if I am missing something big. I really appreciate any kind of a heads up you guys give me. But I'm going to end it right there. Thank you so much for watching this one all the way to the end. Hopefully tomorrow is better, but until next time, take care, everybody.